All right, guys, back to work. Back to work. Break time is over. We got one more day left this week. What a fantastic day today. It took a bit long. We wanted to. We finally got that nice deep pullback. Boy, is there anything better than planning your trades the night before and then making bank on that plan the following day? This is why I love being a trader. So well done today. Now back to work tonight. We got one more day left this week. The markets are setting up with some really great trades for tomorrow. There's one little hiccup though, one issue we have on Friday that we'll talk about tonight. It may make our job a bit more difficult tomorrow, but that's okay though. By the time we're done the video tonight, you'll have an easy roadmap, an easy game plan to make some money on Friday. Now before we jump in and get the party going tonight, finish up what's been a fantastic week so far, make sure you subscribe to the channel. I don't want you to miss tomorrow night's video, so make sure you subscribe. And if you like these lessons, if you enjoy these videos, do me a favor, hit that like button for me. Give me a shout out. Give me a holler down in the comment section. Either way, thank you so much for tuning in, supporting the channel. Enough of the intro though, Joe. Friday's not going to trade itself. Let's get ready for Friday and finish up what has been a fantastic week here. Get the charts all ready to go here. Nasdaq triple Qs are ready. S&P and the SPY is ready. We'll start off tonight, as always, on the 60-minute time frames. I like to use these 60-minute charts to give me a bigger picture look. It's easier to plan my trades for the following day. Later on in the video, though, I'm going to drill down to some tick charts, some faster time frames. Tick charts are what we use to time the perfect entries. So we'll start off first in the big picture, plan our trades, and as we go deeper into the video tonight, we'll do some tick chart analysis and time the perfect entries here for tomorrow. Now, what are the 60-minute big picture charts telling us right now? Well, they're kind of telling us three important things. One, we know we're pretty bullish overall right now. We know we have a really big move after the FOMC, really big move all week this week, and everyone is still trying to buy as low as they possibly can. We're bullish overall, a bullish directional bias, as we say in our trade room. Big move higher says my focus tomorrow, and really probably until something changes here, is to buy as low as possible. The biggest clues tonight that are really telling us where the best entries are going to be to buy low tomorrow is on the tick charts. So we'll dive into the tick charts here and talk entry tactics in a moment. But before we do that, before we dive into entry tactics though and get our hands dirty on this, let's check the calendar for tomorrow, because there are 5 things that you want to have on your radar for tomorrow. The first thing is overnight. Overnight tonight, we're going to hear from China. China has a big data dump coming out 11 o'clock, midnight Eastern time overnight. Their big headline employment number is coming out overnight. So just be aware of that. Sometimes that news of China can move things around. So China news coming out overnight is one thing on my radar. The big news for tomorrow is the PMI composite number at 9:45. That's the perfect time for news on a Friday morning. So keep that on your radar. The big issue though for tomorrow, the big kind of variable for tomorrow is quadruple witching. Now quad witching, I won't go into a lot of detail about this, but all 4 asset classes expire at the closing bell tomorrow afternoon. This oftentimes creates very choppy and inconsistent price action. So that's one kind of variable that I'm hoping will be mild compared to previous quad witching sessions. But if the price action is kind of nasty tomorrow, you know what to blame it on. It's quad witching. It's absolutely tradable, but just be aware though that we may be a bit jumpier tomorrow than we normally are. The fourth thing on my mind for tomorrow is tomorrow's a Friday. Fridays, remember, my goal, my mindset on a Friday is to get into trades as early as I can, remove risk, take some profit, but leave a runner. If there's one thing about Fridays get low volume as the day gets later, and that low volume tends to make the markets run. So my mindset on Friday morning is always the same. Early in, remove risk, take some profit, lock up some gains, but try to leave a little piece of that position open, because Fridays, they oftentimes can give us some of the biggest moves of the week. And the final thing, the fifth thing on my mind tonight is the final newsletter video on this YouTube channel for the year 2023. We've had a record-breaking year. Love seeing students make bank with us in the trade room this year, but tonight we'll wrap up the video newsletter newsletter. Not to worry, we'll come back on Monday, January the 8th. Make sure you subscribe, hit that notification bell, and follow along. I'll give you guys updates as we get closer to relaunching in the new year. I will continue, though, to post mindset videos and strategy videos, the YouTube shorts I know you guys love. So you'll be hearing more from me, though, over the break. But final video newsletter is tonight. We'll come back on Monday, January the 8th. So be aware of that. China news overnight, PMI news tomorrow morning, quad witching. I know, quad witching is the one big hiccup we may run tomorrow. Keep that Friday mindset in the back of your mind. Early in, take some profit, leave a runner, and I will miss you guys over the holiday break. That's all right, though. We'll come back. We'll come back rested and refocused in early January. Now, back to our charts, though, right? We all know the money is made on the charts, right? Let's now go to my favorite trades here for tomorrow. Let's start first here on the E-mini. We'll wrap up, of course, tonight on the Nasdaq and the triple Qs. The 60-minute charts are pretty simple right now. We're bullish overall. My directional filter is bullish. It's a big old move going higher after FOMC, and we're trying to buy as low as we possibly can. The real information, though, the real important stuff is on the tick charts. Let's drill down those tick charts here right now, because this is really where all the important entry timing is going to be. Now, keep in mind, this is a 7,000 tick chart. You'll see linked up there in the upper left-hand corner. And if you're watching for the first time right now, that is the 21 EMA, in case you're tuning into the YouTube channel for the first time. There are two really important clues here tonight on this tick chart. The first one is this trading range. We have a bullish market overall into a trading range. And as we talk about in our free video classes, we have a run lower, and buyers are trying to rotate off that low and complete a pendulum swing. Now, once they complete the pendulum swing, we may see a reversal back down in. I'll definitely talk about that as we go deeper here tonight. Or we may see a breakout pullback and continue through those highs. The first clue is a bullish range with rotation off the low. The second clue is just as important as the first clue. It's a strong move down. Anytime we see a strong move in one direction, we expect a pullback and a retest of that level. We talked a lot about this last night in the video newsletter, in the sense that if we saw a very strong run down, what did we say last night? Expect that pullback and expect them to want to retest that low. You have to assume there are tons of buyers down here in the overall bull market looking to rip this thing right back up. I will certainly talk about how to time that perfect double bottom reversal as well. So when you put these clues together, when you put the bullish range with that strong move going lower together, it kind of gives us, I think, a pretty easy game plan for tomorrow. What should happen is we should go lower and then look for that run back up. We'll cover that first tonight on the video. Later on in the video, though, we'll talk about if we don't go lower and if we go higher, because there's just as many ways to make money as we go higher. There's also some traps I want you to avoid if we go higher as well. So we're going to cover that move going higher here in a moment. Don't you worry. Now, if we end up back at those lows, this is going to feel very bearish overall right now, so we're not going to try to pick that bottom. We're going to use that classic failure into pullback combination. It'll look like this. Get those bears coming in, trying once, trying twice. Again, if we roll going lower, it's going to feel very bearish. That short-term momentum is going to try to keep this thing running lower. I'm not going to try to pick that bottom. I'll let those bears try once, let those bears try twice, and then try to use their stops to fuel this move going back higher. We call these failure patterns in our trade room, and a lot of examples of those in our free video course. Now remember, the market wants to rotate back up into that trading range. If we can get that two-try failure off that double bottom, what I can then go looking for is that squeeze running higher. Remember, as the market goes higher, I want to buy as low as I can. I'm going to buy what I call a bear trap on the way going higher. Look how I draw this. It's a higher high in price and a trap right below that low. So again, what should happen right now is we should end up trying to go lower and retesting that low. Once we do, let's trap those bears in. 2 tries for the bears. Use those stops to fuel that move higher, and then look for that bear trap, that higher high in price, and that trap below that low. A lot of examples of those in the free video course. Now, there are oftentimes some variations of this. For example, let's say, for example, we get a strong move down, they retest that low, but we don't get the 1, 2, and then back up. There could be so many buyers down there, they may simply V-bottom right off of that low and right back up again. How do you trade that? Well, the key is don't chase it as it goes higher. If we see a V-bottom off of that low, it'll oftentimes pop up and begin to grind and grind and grind like that. Whatever you do, don't chase it going higher. Watch closely. Draw a trend line off that high, pin it down around that low, and then look left. Find some prior swings, and what you want to do is use any of the entry patterns you guys are learning in the free video course. I love traps like this one. It could be a trap pattern, a failure pattern, a pullback combination, right? A strength trade as we're going higher. But that's how I trade this on a V bottom. Again, I'm hoping we'll get the good signal down here, trap those bears in. But if it V bottoms and starts grinding its way higher here, focus on buying as low as you can. And again, I love traps. It could be a failure pattern there as well. Now, let's take a moment and slow down for a second. If you're watching for the first time right now, this may be way, way, way over your head. This might be a brand new language for you, but don't you worry. I teach all these entry setups, all the entry rules, and I have hundreds of examples of traps and failures. It's all taught. I cover it all in our free video classes. What I'll do is I'll put a link up here for you. In the upper right-hand corner, grab that little info link that pops up there in the upper right-hand corner and take that free video course, because the strategy you'll learn in that short video series, it'll teach you 2 things. First, how to know where the best trades are going to be that day. I'll teach you a simple trick to know exactly where to look for the best entries each day. The second thing, most importantly, I'll teach you how to time the perfect entry with 4 of my favorite entry patterns. The markets are way too good right now not to be making consistent money. If you're missing the best trades each day, take that free course. It's perfect for someone trying to make the jump into full-time trading. And if you can't grab that link up top there, not to worry. I'll put all the important links tonight, the description of the YouTube video, the free class links, our trade room membership links, and of course, I post a lot on Twitter during the day. If you're on Twitter, give me a follow. My Twitter handle down there, the description there as well. All right, so now that you know where to learn more about all these entry tactics I'm talking about right now, get the roadmap we use in our trade room, let's keep going. Couple variations of this. We're expecting this market now to try to make that run going lower. If it really rips, all right, we talked about this last night. We've got that range down here, right? That range here on the S&P. If it really, really rips and run lower, remember these 2 entry patterns to buy that big rug pull. If it rips and runs lower, I'm looking for that crown reversal. It's a slight variation of the 2-try failure. It's 2 tries for the bears and a bear trap underneath that low. Now remember, those big strong moves down, they're going to want to what? They're going to want to retest that low. If they go back and retest the low, then we can use that 1, 2-try failure we talked about earlier on that double bottom reversal. Makes sense, right? So if we get the rug pull, again, doesn't seem as likely for this tomorrow, but be prepared. Nobody has a crystal ball. We're way, way high up right now. Tomorrow's quad witching Friday. A rug pull may happen. It may run all the way back into that trading range. And if it does, remember, strong move down like this, they're going to want to retest that low. So buy as low as you can with a crown reversal pattern. Bears once, bears twice, buy that bear trap, and hopefully this will rip right back up for us, right, and make us all a bunch of money. The problem, though, is with that strong run down, though, they'll oftentimes hold some resistance levels. The bears will come back in, short that sucker again, and they'll wind up retesting that low. Once they retest the low, that's that double bottom reversal. And in this case, we can be a lot more aggressive on this one, because all the bears who got short here, they'll take their profit on that retest. When the bears get out, we can now trap in those rookies once, rookies twice, and then again, use those stops to fuel that move running higher. So in case they do rug pull tomorrow, that's the game plan I'm watching on this. And the other variation of this, the one other variation of this is we may not get that full move back down again. I anticipate a retest of that low because of the strength of that move. But let's face it, it's a bull market overall. We've got a bullish range. The buyers, they're going to want to rotate this thing higher. So I've got some levels marked up on the S&P. I'll show you these, of course, in the Nasdaq in a moment. We may only make it underneath a little bit of these lows right here. How do you trade that? I want to buy as low as I possibly can. So if all it does is try to go lower and take out that low, but then all of a sudden we see the bears come in and they try once and they try twice. Remember, we want to buy as low as we can. And the one setup we use to buy nice and low is a bear trap. The bear trap is the key here if we don't end up down around those lows. Again, I'm anticipating we're going to head lower, take out that low, get those bears come in, trap them in, right? Two try fair like today earlier, and then right back up and then grab that bear trap going higher. I like that game plan. That seems most likely. But again, if they try to go lower, but then all of a sudden we're starting to stall, right? And the bears are trying, your goal is to buy as low as you possibly can, get those higher highs in price, that nice strong signal. That could easily be a nice ripper back up to retest the high, up around that pendulum swing, and potentially up around that FOMC measured move. Leave that runner, right? Leave that runner because tomorrow, of course, is a Friday. All right. I think we've covered all the possible scenarios. And believe me, I wish I knew exactly what would happen tomorrow. I wish I had a crystal ball, but I don't. And I want to go over the game plan that you guys have a roadmap to make money no matter what happens. Now, the next question is, what do we do if we go higher? There are some easy ways to make money going higher, but there's some easy ways to lose money as well. Let's talk about that now on the Nasdaq. The Nasdaq, of course, is getting lonely over here on the video tonight. All kidding aside, though, very similar on the Nasdaq. Big bullish move up. I want to buy as low as I possibly can right now on the NQ. The real clues, of course, just the S&P, are on the tick charts. This, of course, is a 4,000 tick chart, upper left-hand corner, and as always, the 21 EMA. Same two clues on the NASDAQ. It's a bullish move into a trading range, bullish move into a trading range. The buyers right now are trying to go back up into that range and punch out those highs. We call that range rotation coming off the low. The one very obvious part about this is look at the strength of that move down. We talked about this last night, and we talked about a moment ago on the S&P. When we see, even in a big bull market like this, if we see a strong run down like that, the bears are going to try to take out that low. So the exact same game plan we talked about on the S&P, where anticipate that retest, use that two-try failure into that bear trap going higher. If they get that big rug pull, right, use that crown reversal to buy nice and low. Be prepared for the retest of that double bottom reversal, right? Be prepared for a retest of that low. Do not lose sight of the overall bullish bias on the 60-minute. I realize if it goes lower, it's going to feel very bearish. The news media will say, oh, it's different this time. No, it's not. It probably is not different. It's probably just a deep pullback in an overall bull market. So trap those rookies in. Don't pick those bottoms. Don't be a rookie, right? Don't be a foolish rookie. Don't pick tops and bottoms. Trap those bears in. Crown reversals, double bottom reversals, and squeeze those stops back up. Now, if we start going higher, there are two types of entry patterns I'll be looking for here for tomorrow. The first one is a pop and grind. This thing may end up popping up and grinding. I talked about this earlier on the S&P, right? This looks very familiar, we described earlier on the E-mini. Again, we anticipated wanting to retest that low, but who knows, right? Who the hell knows? Nobody knows. If we start grinding higher here right now, we know the market wants to go back into that range above. We also know we do not want to buy high. If there's one thing we know for tomorrow, we cannot buy high because we're on Mars right now. We're with Elon Musk and SpaceX right now. We're so high up on the chart after FOMC's, big YOLO move, right, going higher yesterday. Mark that trend line off the high, right? Mark that channel off the low. See how I do that? Pin off those lows, look left, find some prior swings, and grab that first test. The first test off that channel. Since the first test, right? It's the first time we pull back to that channel. First test is the best test. And I got to keep the video simple tonight. I'm not going to go over all the entry patterns. It could be a bear trap, a failure pattern, a pullback combination, a strength move going higher. These can really rip. And again, I have a lot of examples of these, and I'll teach you more about the entry patterns, entry signals inside the free video course, right? So grab the link in the description down below. That could easily be, if we rip higher, right? If we open up in Asia or tomorrow morning, or let's say whatever, right? We may go lower and then bounce back up. If we rip higher, there's one entry pattern I have to use. If we do rip higher, it's a bear trap. Okay, it will always be a bear trap. The way you make money before you go back and retest the high is a higher high in price and buy nice and low with that trap pattern. Learn this pattern. Learn this pattern in a bull market. It's the best way to trade, to buy as low as you possibly can if you begin to squeeze and run going higher, which again is certainly a possibility on this. Another possibility would be we may punch up and begin to grind, like that, right? Same idea. Mark that high, mark that low, get that nice deep pullback. In this case, you're more likely though to get underneath that moving average, trap those bears in. Remember, anytime we see a strong move in one direction, we're looking for that retest of that high, failure into pullback combination. Right? So if it ends up kind of popping up here and grinding, you know those buyers are going to want to buy that pullback because everyone will be itching to get in on that turn. Now, one more question. In my video classes, we talk about double top reversals. So if we find ourselves all the way back up to retest the high, how would I short this? This is always one of the tough ones because you're going against all of that short-term momentum. Okay? First of all, if you're going to short something in a bull market like this with all this momentum coming off of that low, it's a half size position, it's a quarter size position. If you're trading one contract, it's a 0 size position. Get some more money in your account, get a few more contracts, get some experience, focus on the easier winners. So this reversal might not be for everybody, so be aware of that. As we go higher, what's the problem? Momentum. It's a great spot for reversal, but momentum is a big concern here. The way you short this thing is you have to trap the buyers in. I need to get some fuel to run this thing back down again, because we have all that momentum for the buyers. It doesn't matter if we're up at resistance. In a bull market, these will oftentimes keep on going. So what we do is a crown reversal. We wait for the buyers to come in and try to buy once. We wait for them to try twice. And what we do is once those buyers are committed, now we know we have their stops. And their stops are going to fuel that reversal for us going lower. Remember, the challenge, though, is we're overall bullish. And because of this overall bullishness, I have to make sure in a reversal setting, I have to make sure I sell as high as I possibly can with a bull trap. Okay, that bull trap is necessary. Why? Because what happens is there'll be a channel coming over here off that high, off that low, and for all I know, they're going to hold that channel and keep it going. Right? If I don't sell as high as I possibly can, I'm going to walk right into a bear trap. Make sense? This is why in a bull market, if I go lower, bears once, bears twice, I can buy that failure pattern, right? I'm going with all of that bullish momentum. However, when I'm going against that trend, buyers once, buyers twice, if I apply that same entry pattern, very, very important right now, pay attention. If I apply the same entry pattern and I short right there, I'm oftentimes shorting right into, remember we're a bull market overall, I'm oftentimes shorting right now into a bear trap. All right, I can solve this problem. I can solve that problem as long as I get long above that high. Get that nice signal candle, take that 1-to-1 first target, move that stop down to point of entry, right? Get all the risk off that trade. Then at that point, it's a free trade. At that point, if I get my head taken off by that bear trap, who cares? Stops move down, target's already hit, easy, right? No big deal. If I'm right about this though, it'll drop, right? It'll drop. The key though is protecting yourself against that bear trap off of that high. I hope that makes sense. Okay, learn this technique. Learn when to use bull traps. Learn when to use stops as fuel. This again is a crown reversal pattern. It's the best way to short a bull market into an area of resistance. All right. And again, I'm telling you right now, if we do run up and we start grinding and grinding and grinding, do not try to short that thing. All right. That grinding motion, that grinding, look right here, pop up, start grinding. Do not short that thing. Find that channel, right? And buy the low of that channel, right? Mark off that high, mark off that low, and get that first test off of that low. It's that pop and grind higher. It's that pop and grind higher. Be very careful fighting against those pop and grinds, right? But if they run up and we start seeing the struggle, buyers once, buyers twice, I know it's tough, right? But wait for that bull trap and short back down again. Every once in a while, it'll go up, V-top, grind down like that. Right? Same idea. Mark that low, mark that high, find those prior swings, sell as high as you possibly can, right? Above those swing highs. That way you're protected if it does retest that low and then rip back up because, again, you're in an overall bull market. All right? I realize that's a bit more advanced, but I think if you keep on practicing this stuff, keep watching these videos, and, of course, join us in the morning trade room. We do all this stuff together every morning at 8 o'clock Eastern time. That's really the best place to come out and learn this stuff and make sure you're doing it pretty well. All right, guys? The game plan is set for tomorrow. Let's all cross our fingers. Tomorrow's quad witching is a mild one for us tomorrow. It's been a fantastic week. We got one more day left. Hopefully, I will see you tomorrow morning. Remember, we get together 8 o'clock Eastern time every morning in our trade room. I'll put all the important links, the free class links, the trade room membership links, my Twitter feed down there as well. So grab those links. Start first on the free video classes. Get your feet wet. Learn the basic strategy. And I'll bet sometime soon we'll see you trading with us in the morning trade room as a student at 8 o'clock Eastern time. Any questions, any concerns, any trouble getting access to our video classes, please don't be afraid to call the office or use live chat. We're always here. If you need help, don't be a stranger. Reach out and I can easily help you get access to our free video classes. All right, guys? Fantastic job today. Fantastic week. It's been a fantastic year. There is really no better feeling than helping people make money in these markets right now. So thank you so much. I love each and every one of you guys. I will miss you while we're gone over the holiday break. Have a fantastic Christmas and New Year's and happy everything, happy holiday everything, whatever you guys are celebrating over the month of December. I'll see you guys back here in early January. In the meantime, be well, be nice to each other, and you better be here next time. Adios, amigos. Bye-bye for now.